Hey traders, it's John Fortune here with this week's weekly Forex forecast. I hope you're having a great weekend. Last week was a fantastic week. We had 11 out of 12 Forex pairs highlighted in last week's video, closing successfully in the direction outlined. And we also had all 5 of the best pairs highlighted in last week's video, closing successfully as well. And with the recent uptick in volatility in the markets, this is bringing tons of opportunities. And we've had really good trading conditions recently alongside these increased levels of volatility we're seeing. So if we have a quick look at the economic calendar heading into next week, you can see there isn't too much we need to pay attention to here in terms of short-term trading. We do have non-farm payrolls on the Friday. It is non-farm payrolls next week. And it's also worth remembering that it's the last week of the quarter. So you may see some corrections, some profit taking coming in. I wouldn't go too crazy with your trading next week because of that. I would look to take maybe just a few trades, but again, just be careful because you can get corrective markets in the last week of the quarter. As profit taking comes in, people book their profits. So we may see a little bit of neutrality in the dollar leading into this, but when we look at the scorecards, the dollar is fairly neutral anyway. I think there are better currencies to trade next week. And the second thing to note, just jumping ahead a week, is the RBA interest rate decision on the following Tuesday. And this interest rate decision on the 5th of April is something we need to pay attention to because, again, when we look at the scorecards, the Australian dollar is currently overbought. It's the strongest currency. And usually when you have an interest rate decision coming up in the next week or so, you can see that currency correcting, turning neutral into the event itself. And when you combine that with the fact that the Australian dollar is currently overbought with a score of 4, there are two things here that are suggesting we could see some near-term corrections in the Australian dollar pairs. So very important when we go through the markets to bear this in mind. And it's for these two reasons that although I am going to be looking at potential Aussie dollar opportunities next week, they are not going to be highlighted as my top pairs because the risk of a correction is greater. You have 3 things really going into next week. You have the overbought score of the Australian dollar, as we will see when we go in the scorecards, which increases the risk of the Australian dollar pairs correcting. You have an interest rate decision just over a week out, which increases the risk of the Australian dollar pairs correcting. And you have the last week of the quarter where you can see people who have made profits on these large Australian dollar moves recently, booking profits at the end of the quarter. So there's 3 reasons for the Australian dollar to be corrective heading into next week. So you do need to pay attention to that if you're trading the Aussie pairs next week. Okay, so if we have a quick look at the scorecards, and again, remember these are 1 month forward-looking scorecards. They're showing you the highest probability direction for the currencies over the next 1 to 4 weeks. And you can see the Australian dollar scores 4, which is overbought. You have strong bullish bias, bullish to neutral, neutral, bearish to neutral, bearish bias, strong bearish bias, and oversold. And you can see we just already discussed that the Australian dollar is not just overbought. We also have an interest rate decision just over a week. And it's the end of the quarter next week. So there's 3 reasons why the Australian dollar could actually correct over the next week. So I do still favour Aussie longs. If you are already long the Australian dollar, I would be using this to book profits into the highs. That's really the best way to use overbought and oversold. It's not to be contrarian and try and pick tops and bottoms. I would be looking to book profits in the Australian dollar, and I would primarily want to get back involved in the Aussie pairs after the interest rate decision on the 5th of April, because between now and then, upside in the Aussie pairs is likely to be capped, and in fact, I would expect the Aussie pairs to correct into the 5th of April. So after the Australian dollar, which is currently overbought, we do have the New Zealand and the CAD. Now, these represent my 2 favourite long currencies heading into next week, and I would primarily like to pair those with the pound and the euro because you can see these have a bullish bias, scoring 2, and the pound and the euro, they have a forward-looking bearish bias of -2. The Japanese yen is scoring -4, so it's oversold. So really opposite to the Australian dollar, it suggests over the next 1 to 4 weeks, we're going to see a correction in the Japanese yen in all probability. That's the highest probability. So you can almost take those 2 out of the equation for now, the Aussie and the yen, because we don't really want to try and pick tops and bottoms in those markets. However, if you are short the yen or you are long the Aussie, it does look like we're coming to the end of those moves in those currencies, and profit taking, in my opinion, would be advised. It doesn't mean the Aussie can't go a bit higher. It doesn't mean the yen can't go a bit lower. It just means the probabilities of a correction in those currencies over the next 1 to 4 weeks is high. Now you can also see the US dollar and the Swiss franc are kind of neutral. So my primary currencies going into next week will be Euro New Zealand to the downside, we'll be looking at primarily. Pound New Zealand to the downside, we're going to have a look at. Pound CAD to the downside is certainly a market I'm going to be interested in, and EurOcad to the downside I'm going to be very interested in. We also will look at the Aussie pairs and the Yen pairs, but just bear in mind they're overbought and oversold status when we go through those markets. Okay, so a quick look at the individual currencies just to corroborate the scorecards that we've looked at. You can see, technically speaking, the dollar is neutral, just as the scorecards show. 2 weeks ago, the scorecards told us to be neutral on the DXY, and in fact, it's just been coiling inside a pennant ever since. It is in an overall uptrend, so I am looking for higher highs in the dollar, but as it currently stands, I think there are better markets or better currencies to trade, because who knows for how long that this market can continue to coil, and we don't really want to be involved in that if it's just going to range. We want to find the markets which are going to move. Next is the euro. Now, the euro is quite weak, and you can see it's really just the opposite or very similar to what we're seeing in the DXY, but we are forming a bear flag in the euro, and I am looking for further declines down to the 1.0744. This would also push the dollar higher. We would see DXY rising in this scenario, and euro weakness is definitely something I'm interested in looking at next week. Next is the pound. This is my second favorite short currency next week. Again, you can see we've just been pulling back, and I think there's a high probability we come down to the 1.2984. So this move down to the 1.2984 in the coming week or so is definitely something I'm going to be paying attention to, and I think this is representing one of the best opportunities to get paid over the next week. So I like pound to the downside next week. Next is the Swiss franc. This market is currently structured to the downside, and it does look like we also have a bear flag here. So the Swiss franc is bearish to neutral. I think there are better currencies, but what this is showing us is that I definitely wouldn't want to be long the Swiss franc. If you're going to trade the Swiss franc, it's better to be looking to be short. So that would be something like Aussie franc to the upside, or even better, because of reasons discussed with the Aussie pairs, New Zealand franc to the upside, CAD franc to the upside, etc. I think buying Swiss francs next week is the lower probability play here if you're trading Swiss franc. Next is the Japanese yen. Now, the Japanese yen has just crashed to the downside. We did see a close higher right at the end of the week, and with the oversold reading we have in the scorecards, this suggests that there is a higher probability than not that the market is going to correct. So I wouldn't be surprised to see this market snapping back. You can get quite vicious snapbacks when you have short covering rallies. I am still bearish overall, but I wouldn't be surprised to see a correction first now in the Japanese yen. So with this really strong momentum, what I would like to see is for the next real big opportunity in the yen is any correction in this market would be the opportunity to look for shorts once again down to the 0.008083. Next is the CAD. Now, we took out the target to the upside in the CAD last week. CAD is benefiting from the recent rally in crude oil, and we're seeing the stagflationary scenario playing out, feeding into all of the commodity currencies like the Australian dollar, like the New Zealand dollar, like the Canadian dollar. You're even seeing this in the Mexican peso, the NOK. All of these currencies are strengthening. And CAD longs are one of my favorite plays next week. Next is the Aussie. Now, the Aussie took out the target set to the upside last week. I am still bullish on the Aussie. However, I wouldn't be surprised to see a bit of a correction first. And my guess would be perhaps we come and take out the target first in the Aussie at the 0.75540. And we then correct into the 5th of April. That's what I think is most likely to happen. So I am bullish on the Aussie. I wouldn't mind looking at maybe a position in the Aussie pair, but I think New Zealand pairs, CAD pairs, Euro pairs, and Pound pairs are better markets to trade next week because of the risk of correction in the Aussie. And finally, New Zealand, we took out the target to the upside last week to the pip. And you can see technically we've broken out of a major inverse head and shoulders here in the New Zealand dollar. So I'm looking for further advances next week, and I really like this for long opportunities. Okay, so moving on to the markets themselves, starting with crude oil. Last week I was bullish on crude oil, and we came very close to taking out the target, missed it just by a point. So any pullback in crude oil, once again, is viewed as an opportunity to look for further advances into the 11819. And if we can break through here, going to be looking up towards target 2 in crude oil at the 12817. Now, aside from crude oil itself being bullish, as I said earlier, you're seeing this feeding into the commodity currencies, especially the oil-producing nations like Canada, Norway, and Mexico. And it's another reason why the Canadian dollar pairs to the upside are favorite plays going into next week. And EurOcad, PoundCad are both highlighted here in gold as best opportunities next week. So the first pair we're going to look at is Euro New Zealand. This is my favorite market heading into next week. Any pullback, we've already started to form this kind of sideways pattern, but any continued correction in this market is simply viewed as an opportunity to look for bearish reversals into the 1.5667. And because we're fairly close to this target, I think we can break through here next week, and I'm going to be looking down towards target 2 at the 1.5474. Next is Pound New Zealand. Now, alongside Euro New Zealand, these were both shorts in last week's video, and although they didn't reach the target, they were very good moves. I do think we're going to come and take the target set from last week at the 1.8859. So any pullback first would be fantastic. As anybody who's not involved from last week, this would give another opportunity to look for shorts into the 1.8859. And I'm going to be looking through there down towards target 2 at the 1.8732. Euro New Zealand and Pound New Zealand represent my two favorite markets next week. Next is New Zealand Yen. Now last week we took out both targets to the upside. This was a fantastic buying opportunity highlighted in last week's video. Coming into this week, I am still bullish on New Zealand Yen, but because of that oversold rating in the yen, it doesn't get highlighted as a best opportunity because there is an increased risk of a correction. So any pullback in this market, and preferably the deeper the better because it gives us a much nicer or more room to run to 85.89. But any pullback in New Zealand Yen will be viewed as another opportunity to look for bullish breakouts into the 85.89 and then onto target 2 at the 87.72. Next is EurCad. Now EurCad took out the target at the 1.3752 last week. And this is the third of my 4 favorite markets heading into next week. You can see we're already breaking down with momentum. So any pullback in this area, any bear flag type pattern is simply going to be viewed next week as an opportunity to drop down and look for bearish breakouts down to the next target to the downside at the 1.3523. Keep an eye out for this move because I really like EurCad to the downside next week. Next is PoundCad, and this marks the 4th out of 4 best Forex pairs I'm keeping my eye on next week. We have come very close to the target at the 1.6416. So for anybody not involved from last week, what I would want to see here is one of two things. Either we pull back before taking out this target, and that gives us the opportunity to start to look for reversals to the downside and bearish setups into the 1.6416. Or if we come down at the start of the week and take this target out first and then bounce, what I'm going to be looking for then is any pullback from that bounce. I'm going to be looking for shorts into the 1.6335. So really like PoundCad. Keep an eye on this market to the downside next week. Next is CAD Yen. This was a fantastic buying opportunity highlighted in last week's video. We took out all 3 targets to the upside. We had huge moves in the yen pairs. I am still bullish on CAD Yen, which is why I've put it into this video, but just bear in mind we may spend a week correcting in the yen pairs because the yen is currently oversold. So any pullback in this market, if we can get a deeper pullback like this, perhaps it just corrects for next week, and then maybe towards the end of next week or the following week, any breakout to the upside would be viewed as another opportunity for the next leg up into the 99.59. So I am bullish on CAD Yen, but we may have to be a little bit patient on this for the next wave up because there may be a correction due in the yen pairs. Next is EurAussie. Again, none of the Aussie pairs highlighted here in gold because of the risk of corrections, so we may need to be patient over the next week in these markets, but they're worth keeping an eye on. We took out the target to the downside last week. This was a really nice short last week. What I'm looking for here is any pullback in this market, and perhaps we spend the next week or so correcting like this in EurAussie, and then when we have the interest rate decision, we break down like this, and that would be the opportunity to look for shorts once again into the 1.4431. So I do like EurAussie to the downside, but we may be due a correction first. Next is Pound Aussie, another really nice short last week. We took out all 3 targets and then some. Coming into this week, what I'd like to see is any pullback in Pound Aussie will be viewed as an opportunity to look for bearish reversals. I'm going to be looking at down towards the next target at the 1.7427. Next is Aussie Yen, highlighted as a really good buying opportunity last week. We took out both targets and then some. Any pullback in this market will be viewed as an opportunity to look for bullish setups. Just bear in mind the Aussie is overbought and the yen is oversold, so we could get a very deep correction in Aussie Yen. If you are long Aussie Yen, again, it's always entirely up to you how you trade your accounts. But if I were long Aussie Yen, I'd be certainly looking at booking some profits in the near term because we may get quite a sharp correction in Aussie Yen. So I'd like to see this market correcting first. I wouldn't want to be buying at the top here. But once this market corrects, any deep correction in this area will be viewed as an opportunity to look for bullish reversals once again into the 92.66. And what I'd really want to see is, as this market corrects, I'd want to see both the Aussie and the yen coming off of their oversold and overbought scores, which would prepare us for the next rally in those currencies. And finally, we have euro dollar. We cover euro dollar every week. I'm still bearish on euro dollar, but you can see when the dollar is not strong or you have kind of neutral currencies, even if you have a neutral versus a slightly bearish currency, it really doesn't go very far. And all of these kind of corrections are what the scorecards keep us out of. They put us in front of the most volatile markets, the biggest movers each week. And so I am looking further declines in euro dollar. Perhaps we start to see, as the euro breaks down, we start to see some momentum coming in. I would like to see some momentum first, and this would be somewhat of a head and shoulders breakout down below this level. So if we could break down here with momentum next week like this, I would be looking for a pullback in euro dollar, and I'd be looking down towards the 1.0781. So I do think this move is coming, but look for the momentum and the breakout first. Otherwise, this could just continue to correct. And if you jump in before you get any of that momentum to the downside, you could just be stuck in a ranging market for the next 2 weeks. So I like euro dollar, but look for the breakout to the downside with momentum first. So finish off with stocks, gold, silver, and Bitcoin, starting with stocks and starting with the SPX. Last week I was bullish on SPX. We are approaching the 4581, which is the target to the upside. Any pullback in this market would be viewed as an opportunity to look further advances into the 481.78. And if we break through here, be looking up towards target 2 at the 4733.77. Something which I mentioned last week, however, is that although I am bullish on stocks as it currently stands, the market is still in a downtrend. This is a counter trend move, and counter trend moves are always more risky. So if you only like to trade long positions, for example, in an uptrend, then you can just sit these out, because any longs in stocks currently do have slightly higher risk. It's close to trying to pick a bottom. You're not quite picking a bottom because the market is already trending to the upside in the near term. But because the overall market is down, any long positions in stocks next week are higher risk, so just bear that in mind. There's nothing wrong, as I always say, with just sitting on the sidelines waiting for nice trending markets in order to get involved. Next is the Nasdaq. Now last week we took out the target set at the 14645.43. The Nasdaq is bullish in the near term, but again this is counter trend. The overall trend is still to the downside, so any pullback would be viewed as an opportunity to look for further advances in the Nasdaq into the 15165.51. Next is the Dow Jones. Last week I was bullish on the Dow Jones and we did come up and take out the highs. However, you can see moves up are slightly capped somewhat because again, the overall trend is down. So I am bullish, but it is counter trend. Any pullback in this market would currently, as it stands, be viewed as an opportunity to look for further advances into the 35594.05. Next is the Russell. Now, out of all of these, you can see the Russell is the most corrective, and it actually is the weakest of all the indices, which in and of itself is fairly bearish for stocks overall because the Russell tends to lead other indices. We are approaching the target set last week at the 2107.08. We don't have much room here, so I would be looking for this target to be achieved. As I've said in previous videos, this is a major inflection point, and if we break above here with momentum, that would be very bullish for the Russell. So if you're not already involved from last week, it doesn't look like there's much risk to reward now to the target of 2107.08. I really think patience is required in the Russell. Look at this range, this tight correction. I'm very interested to see what it does when it takes out, or if it comes up and hits the 2107.08. Does it reject from here, which would be very bearish given how important this is as an inflection point in the Russell? Or does it break through with momentum? And if we get a breakthrough here with momentum and a breakout of this near-term correction, that would actually be somewhat of a leading indicator for the stock market. And it would suggest that the bounce we're seeing in the other stock markets may actually continue up to new highs. But I would really like to see the Russell breaking above the 2107 with momentum before I look to get involved in this. I think the Russell overall is a bit of a wait and see. Risk reward at these levels is not great. And finally, we have the Nifty. Now, the Nifty is currently bullish near term, but again, it is bullish in an overall downtrend. So any longs in the Nifty, although we're seeing sharp short covering rallies and counter trend moves, any longs as it currently stands is actually counter trend. The better trade, in my opinion, in the Nifty is below the 17040. If the Nifty starts to break down like this, especially with momentum, I'd be looking for pullbacks. And this would be in line then with the overall trend in the Nifty. And that's where you're most likely to get really nice moves back down to the lows in this area. So if you want to trade counter trend, I don't think there's much risk to reward here. I personally would leave the longs in the Nifty for the time being. The real main opportunity I'm looking at in the Nifty is a break below the 17040. So if it breaks down here with momentum and pulls back, look for moves into the lows down towards the 15600. So finishing off with gold, silver, and Bitcoin. I have been bullish on gold recently, and we are making our way towards the 2001.49. The slight issue in gold is we had such a huge amount of volatility and a steep run up that you tend to get kind of corrective markets when you see such big moves. And we have been kind of not correcting, but we've been not really going anywhere, kind of just grinding to the upside ever since we retested the 1910. So as it currently stands, you can see we had a really nice breakout to the upside and we're starting to pull back from the highs. So any continued pullback in gold next week is viewed as an opportunity to look for bullish reversals, and especially with the dollar being kind of neutral, gold actually to the upside looks quite good next week. I am interested in keeping my eye on this. So any breakup in this area, I'm going to be looking at initiating longs into the 2001.49. Next is silver. Now silver also looks nice heading into next week. You can see we've started to break to the upside, and I think I actually prefer silver over and above gold next week, just the way it's technically setting up. And remember, just like with gold, we also have a kind of neutral dollar, which is going to assist or support price to the upside in both gold and silver. So any continued pullback in this market, and you can see we're currently forming a bull flag, it is going to be viewed as an opportunity to look for bullish reversals. And I'm going to be looking up towards the next key resistance, the upside and the target set at the 26.89. There is a bit of a gap here, so it may take a couple of weeks to get to the 26.89, but that is the next key target to the upside. And last but not least, we have Bitcoin. Now, ever since we sold off to the downside hard here, I have been bullish on Bitcoin. We had the initial spike, we pulled back, and I've been looking for the target of the 45,649, and just like a magnet, the price has been drawn to this level here, and we are very close to achieving this. So either one of two things here. Next week, either we pull back first, and that gives us an opportunity for anybody not involved previously, once again, to look for a bullish reversal into the 45,649. Or if we come up and take out this target and then reverse, I'm going to be looking at a breakout towards target 2 at the 48,523. So it took a little bit of time from down in these areas, but anyone who went long in Bitcoin in the weekly Forex forecast down here and holding to the 45,649 does look like you're now going to be paid on this next week. So that is it from me for this week, guys. As always, I hope you enjoyed this video, and if you did, please let me know by liking, sharing, and subscribing. A big thank you to everybody who does that on a regular basis, and a big thank you to everybody who has subscribed to the channel so far. I want to wish you all a fantastic weekend, and I want to wish you all the best in your trading next week. The only thing left to say is take care, and don't forget to trade safely.